Welcome, market gods and goddesses. Hope you're having a great day. This is the market goddess here. We have another phenomenal video to you, and it's still September 24th, 2024. You know, one thing ICT said yesterday, the market was so choppy and so bad yesterday. He promised, and it makes sense. I mean, he's been in this business for 30 years. He knows when the market's playing games. That Tuesday was going to be a better day to trade. It was going to be the best outcomes that were going to be developing. And it did, because in all of the strategies, if you notice today, it was the September 23rd was yesterday. All the strategies that I'm showing you today, sadly, you know, me doing this dry, hard, fast right now, I was not at optimum condition. I was up at 3 a.m. this morning, but was very listless, very tired, very sleepy. So I slept in for this particular strategy. One thing I'm very clear about, I do not trade unless I am 100%, you know, perfect health, and I'm feeling good because, you know, clarity, focused, vision, memory, all those things kick in at about that time. So this is for people who want to trade the London session, particularly the Indices US NAS 30. As you can see, that's my baby now, focusing on one for a period of time in order to trade the other ones. I love trading S&P 500. I love trading US 30. I love trading gold. I love trading oil. I love trading Bitcoin and Ethereum. I love trading all of them. But one thing I'm clear about, you know, you master each one of them at the time, because I do believe, though, that there are some days where it looks better, you know, the strategy looks better on gold than it does on NAS, or the strategy looks better on oil in this particular case instead of in gold, or strategy looks better on US 30 instead of on NAS 100 or the S&P 500. So, you know, once you're able to master one particular instrument, move on to another one and master it, or sometimes you may see it in GJ. Or you may see it in GU or EU, you know, factor in the dollar, you know, and do the wonderful divergence as far as with the dollar's going, or the counter position. You know, when gold is going, I mean not gold, when the dollar is going down, you know that Aussies is going to go up, you know, type of situation. So, you know, something to think about. But right now, what we're going to do is I'm going to teach you how to do, this is a perfect setup for a really good silver bullet strategy. Silver bullet strategy is really very much time-based. And what ICT created this strategy, I think it was Cameron, one of his other sons. And it's designed, once again, for beginners. I love it because it's about getting 15 to 20 pips max and calling it a day. This was definitely designed between those two numbers, 15 to 20 pips. And you know, my model is you go in twice, that 20 turns into 40. You go in 3 times, that 20 turns into 60. So you get more bang for your buck, for lack of a better term, as far as your entry is concerned. So with that in mind, I'm going to show you how to do that today, market gods and goddesses. So the number one rule as far as the silver bullet strategy. Oh, this is one thing I wanted to tell you. You can do the silver bullet strategy from 3 a.m. to 4 o'clock p.m. Another strategy is from 10 a.m. to 11 a.m., which is during New York time. And before New York closes, it is from, let's see, I think at 2 a.m. until 3 a.m. But once again, one thing about the silver bullet, sometimes you will see it before, a little bit before 2 a.m. and a little bit after 4 a.m. To get the major move. As you can see here, this became a major move after, you know, 4 o'clock. And this really went up to, let's see here. Let's see, I got in here. This came to 30 and going up to here. Wow. Definitely over 100. Yeah, definitely over 100, maybe 120. This would have been, as far as points is concerned, let me see here. This was 917, and this came to 992. Oh, not quite. I would say about 80 pips, approximately. That would have been a great day. But once again, we're following ICT rules. We just won our 20. To be safe than sorry. So, okay, here is the strategy, ladies and gentlemen. Okay, you want to write this down, and more importantly, I plan to have the information in a PDF underneath each one of these videos so you're able to pull it up. But what I would like you to do is to listen and write it down, because you learn better when you're writing. Your brain is calculating it, it's getting it in your head, and you're seeing it more than one time. You get kind of lazy when it's already been done for you, like anything in life. You got to practice it and do it in order to believe it. And even writing down the rules plays a major role as far as that's concerned. You're using your brain too when you're writing. Okay, and then it becomes in a physical. All right, it helps you get it better. All right, so with that said, the first thing you want to do is mark off your time for 3 a.m. and also your time for 4 a.m. You want to get that established. Then what you want to do is, once 3 a.m. is established, you want to look for a buy side, and sell side liquidity pool first. Okay, so as you can see here, this proceeded to travel down, and also, let me say, you want to look for fair value gap. Okay, so as you can see, I'm looking, I don't see a fair value gap that's formed, and it's traveling down, traveling down, traveling down, traveling down, and I do see a fair value gap that's formed, but it's right before I put buy side liquidity. It should say sell side liquidity. Okay, apologize for that. This should be sell side liquidity on the 1 minute. Okay, but what you want to do is, when you see a sell side liquidity and that fair value gap is formed right before that, that's a no. That's not a good fair value gap. Okay, because it's most likely, as you can see here, it's going to take out that sell side liquidity and it's going to do a reversal. Okay, that's what it tends to do. Usually if it takes out a sell side liquidity, it plans to reverse to go up to take out what? A buy side liquidity. As you can see, it did right up here. Okay, so I totally ignored that. And when I saw the sell side liquidity get taken out, it got taken out again twice. Here's another sell side liquidity. And then it pushed off of this. I think this was a news support or resistance line right here. Okay, so basically it bounced off of there, and then right after that it formulated its first fair value gap right here. Okay, and as you can see, this is really, 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 really important. Remember, we told you about the market structure shift. As you can see, this candle coming down, it's a lower low, then we got a lower high, then we got a lower low, and then we got a higher low, and then it came down to here, and then we got a higher low. So we didn't get a lower low. Okay, so now we know, okay, that it is a market structure shift. Okay, and it basically went past the fair value gap. Okay, and then it came back in. Okay, so in a nutshell, let me rephrase that. Let me take that back. My bad. Let me do this again as far as market structure shift. Here we have a lower low, then we got a lower high, then we got a lower low, and then we got a higher high, because it went above these, a higher high, and then we got a higher low. That's when you know it's been a major market structure shift. And during that time, a fair value gap was formed, and with this candle here, and then it bounced off the fair value gap. That's definitely confirmation. It's possibly going to go up, which it did do, but then it came back a second time. Usually bounce off it for a second time. It's a greater confluence that is going to go up, which, as you can see here, it did. Okay, not to get too technical, what's called a real gap formed right here, which is greater motivation. It's going to continue to go up inside of a fair value gap. and it bounced off of here. So if I were to get in here all the way up to here, and our objective is what? For it to go and take out the buy side liquidity on this side, which it did do. And that gave me, I already did the measurements, gave me 33 points. Times that by 3, that's 99 points. Times that by 2, that's 66 points. And we definitely made our 1 to 300, or in this case, it would have definitely be for me about 3 to 600. And we are done for today. And this happened at around about, let's see here, 3:53. Not bad for a morning's work. And you're done for today. Okay, so if you like to trade the London hour and you would like to get that done, this is the best time to trade it. I highly recommend it. And let's say you like to trade the London and you like to trade New York, at 10, 11, and you like to trade New York to 2 to 3 in the beginning stage, when you're beginning. If you have a successful day, Elon's motto is you're done for the day. Because what we're trying to teach you is not to become greedy, to get rid of fear of missing out, to get rid of over trading. Those are the top 3 things that so many people do that gets them in a lot of trouble when it comes to the psychology of trading. We feel blessed. We found miracles in the market. We manifested miracles in the market with some good old cash. We robbed the banks for the day, and now we can successfully go to work or not go to work because we made our quota for today that we would normally make if we had a 9 to 5, an 8-hour a day job, and we did that in less than an hour. Okay, so absolutely awesome. I hope you appreciate it. What I'm going to do is go over it one more time so you get it clearly through your head. The objective is to mark off this time-based strategy, 3 a.m. to 4 o'clock p.m. You want to focus on, also marking off the buy side liquidity at the 1 minute mark, and you want to mark off the sell side liquidity. Sorry for that. Sell side liquidity mark at the 1 minute mark. You want to mark that off, and then what you want to do is you want to focus on, once it has its reversal, they call this turtle soup also, and it has its first value gap. If it bounces off the first value gap 1 or 2 times, it's most likely going to continue to go up because there's been a market structure shift is leaning towards an upward trend, and you want to ride that trend because the trend is what? Your friend. All the way up until it takes out buy side liquidity on the 1 minute mark as it has done here. And as you can see here, once it took it out, whenever we take out, a lot of times, even in this case, when sell side liquidity was taken out, what do? We had a reversal. When buy side liquidity was taken out, what do? We had a reversal. So we know these things tend to happen. But better way to not get caught up into the madness. Though I will admit, if in this type of case here, you would definitely had another fair value gap formed here. It had bounced off of this fair value gap 1, 2, 3, 4 times, and it went up and gave you another 50, 60 points. But remember, in this game, it's not guaranteed. But, when you get to the intermittent stage, as far as doing this work, second, third year, you can go on to the next level and, take it to the heights with your goal of getting 100 pips a day. Okay, and definitely firing your boss and trading for a living, which all of our dreams are all about. Okay, so with that in mind, I hope you appreciate this, ladies and gentlemen. I hope you got this, gods and goddesses, and I hope you're just as excited as I am about trading the 3 a.m. to 4 a.m. Silver Bullet Strategy by ICT. I think came out with that one in a 2023 mentorship. Okay, I will see you at the top, all the time, more importantly, ching, ching. I will see you at the bank. God is good. Enjoy your profits. I see you in the next video. Bye-bye for now. I love you.